take a look at the gold prices first of all, where we have seen a decline coming in, 1600 just about holding. We haven't been able to see much of the gains coming into that space especially. Also, take a look at the silver prices, $28 just about holding for that one as well. We have seen the Indian prices continue to be choppy, taking a look at how, of course, the Indian rupee has been trading. The Finance Minister P. Chidambaram then had suggested that the government is unlikely to raise the import tax on gold further. FM said that this may increase the chances of gold smuggling. Instead, the government is looking to introduce inflation-indexed instruments to help curb the current account deficit. In month of January, India raised the import tax on gold to 6% to curb purchases. The demand for gold, seen by many as a hedge against inflation, has led to a rise in current account deficit. CAD has reached an all-time high of 6.7% of the GDP in the month of, or rather in the December quarter. In the meanwhile, the gold benchmark import price has been raised to $521 per 10 grams, while the silver benchmark import prices were cut to $920 per kg in the notification coming in from the Finance Ministry today. Let's get in then. Rajni Panikar, she's head of commodities research, Phillip Commodities, and she joins us live on the show. Rajni, hi, welcome. Let's start with the precious metal space first. And while there are many contradicting fundamentals in the international markets, the Indian market government, of course, not very encouraging for the gold buying here. What's your sense into this space for this new quarter now?
What we have previously discussed on the show as well, what we are noting for gold, Manisha, is that it continues to remain in a very tight range between 550 to about 1600, 1620. That's like about a $50 to $80 range, which isn't actually too wide, so to say, and we expect this range to be maintained at least for the next couple of months because we are not seeing gold reacting to the monetary easing measures that has been put forward by all key major central banks of the world. It should have been one of key reasons for gold to find upward momentum and try to breach a very strong resistance levels which comes in around 1780, 1750 levels. But we've not seen that kind of upward momentum coming in from gold despite the broad basing of currencies across central banks. And also at the same time we are not seeing sharp declines as well, because momentarily we do see some central bank coming in, we do see geopolitical crisis which kind of supports gold, safe haven buying coming into gold in bits and pieces. Therefore overall what we are noting is that it's in a slumber, if I can say that, and unless this slumber is breached on either side, we might not see any strong momentum. And given the fact that central banks are continuing with their monetary easing policy, therefore the potential for an upside remains, but for now it needs to breach at least the 1620 levels for further upside to come into gold.
Sure. Rajni, what's your sense coming in for silver then? Because most of the international banks which have come out for their ranges for 2013 really are working it between 27 on the lower side to $35 per ounce on the higher side. Would you more or less want to stick in that range?
In fact, since silver has breached the 2940 levels, if we have to speak in technical chart pattern levels, then silver has breached a strong support level. And given such a breach, we are looking for the downside momentum in silver to continue, and we are looking at a medium term, a 1 to 2 month time frame for silver to touch about $26. On the MCX silver here, that would translate closer to about 49,500 to 48,500 levels. So yes, for silver we are seeing downward momentum which looks possible that we might see further declines from here, and closer to the range that you mentioned, 27 to 35, we think that 26 is more likely for the medium term.
Kaushal Jaini from Dani Investment Services joins us on the show. Kaushal, hi, afternoon. Start off with your view on gold.
Gold is probably lackluster and it's trading in a range between 1570 on the downside to 1610 to $1615 on the upper side. We could see this week also consolidating in this zone. Probably there is no specific trigger for gold to go up, yes, but we can say that gold has formed its bottom at around $1570 on the international spot front. The only trigger right now which what we anticipate is basically the tensions stirring up between North Korea and South Korea. That could be the positive trigger for gold to go up. But over a period of time, we expect gold to test around $1,640 on the upper side, and this